Welcome to the Video CPA. We are talking cryptocurrency today. I don't know if any of you are getting involved in cryptocurrency or not, but I recently bought some cryptocurrency and sold it by the end of the year and just bought some more today. But anyway, we want to talk about taxation of cryptocurrency. This is the Video CPA, where we talk about tax matters that impact you. Probably the most important and most exciting thing that you want to do in your day, but if that really is the case, you need to get a life, I think, because it's really not that interesting, but it is necessary. So cryptocurrency today, and first of all, we have our disclaimers here that you've read before, and let's talk about what a cryptocurrency is. And this is an IRS definition coming from IRS Notice 2014-21. This is the IRS notice that actually describes the most about taxation of cryptocurrency. And you'll notice, instead of calling it what everybody else does, cryptocurrency, they call it virtual currency. So when I talk about virtual currency and cryptocurrency, we're talking about the same thing, all right? So the IRS says virtual currency is a digital representation of value that functions as a medium of exchange, a unit of account, and or a store of value, okay? Now, I'm not sure if that tells you anything or not, but the IRS has gone as far as saying this isn't a currency, okay? They don't define it as a currency, they define it as a property. And so it's not subject, since it's not a currency, it's not subject to foreign gains and losses on currency exchanges, okay? But if it's a property, then it is treated more like a capital type gain situation. It can be treated like a stock or a bond. So when you sell a stock on the New York Stock Exchange or something, or whatever stock exchange it might be, selling a cryptocurrency is much like that. Okay, it is a property that you own, a capital asset. But on the other hand, there are other alternative ways to tax it. So let's talk about some of these taxing alternatives for you. So the first way and the easiest way to understand is to define it more like a stock and as a capital asset. You buy it, you turn around and sell it, and you pay a gain or a loss. You have a gain or a loss and you pay tax on that, or you have a loss that you can possibly deduct, okay? That's the easiest way to do it, all right? And if you've held it for more than a year, you get a long-term capital gain. If it's less than a year, it's a short-term capital gain, okay? So that's one situation. Another situation is that you receive cryptocurrency as a remuneration for wages. And so you're working for somebody, instead of paying them in paying you in US dollars, they pay you in cryptocurrency. Now, I'm not sure when that happens. It may happen from some of these people that work for cryptocurrency exchanges, possibly for Coinbase or maybe even Bitcoin or something. You get paid in the currency, possibly, which may or may not be a bad deal. I don't know. But if that's the case, it's not taxed as capital gain income. It's taxed as ordinary income because it's wage income. It's taxed as wage income, and you've got to have your withholding taxes and your Social Security and your Medicare taken out of that. So that's example number 2 of how this might be taxed, okay? And then example number 3 has several alternatives, all right? Example number 3 is you are paid, or you pay cryptocurrency for goods and services, okay? So if you're a retailer and you're selling groceries, for example, and somebody comes in and they give you a Bitcoin for your groceries, that is ordinary income to you, okay? Because that's in the ordinary course of business, and so it's ordinary income. If you're a self-employed individual, it's also self-employment income, so you've got to pay self-employment on that. Now, there are some different variations of that. If, for example, you're an independent contractor and you get paid, say, a Bitcoin, which is Bitcoin's selling today at $34,000 a coin, so you're not going to carry too many of these around, and you can't, they're a little too big right now to give somebody a Bitcoin for, for fixing your roof or something. So most of this stuff is done digitally. They would have to have an account that you could transfer Bitcoin over to them, okay? Because it's right now, and Bitcoin, it's not real easy to pass it like it is a currency. Now, you could use another coin and do that with, but which is a cryptocurrency as well. But there's lots. There's probably 1,000 cryptocurrencies out there now. They're really exploded. All right, another way that you might get cryptocurrency is that you might be a miner in the crypto exchanges. And what that means is a miner is somebody or a group that verifies the blockchain numbers and makes sure that those blockchain numbers are correct. And in return for doing that, they usually get a little bit of cryptocurrency for that. And they may get a little bit of a percentage of a few additional dollars as well. But that is income to them, and that has to be claimed as ordinary income. Okay, so you've got miners, you've got contract labor, but anybody that receives cryptocurrency, it is a taxable event, and you have to declare the cryptocurrency on the date, the value of it on the date that you received it. So you need to know what that value is. The way you find the value is to go to one of the exchanges and just get the value at that particular date. And unfortunately, this stuff moves so fast in value that, at 10 o'clock in the morning, it can be 17,000. And this is talking about Bitcoin again. And at 3 o'clock in the afternoon, maybe it's 25,000. So it's very difficult to nail down that value, but at least has to be to the day. So give that some thought. All right. So taxation alternatives, we did cover the mining. I think I've got everything there. It is subject to self-employment. If you're a self-employment individual, you get paid in Bitcoin or Ethereum or something like that. It's subject to self-employment. All right. And it's subject to self-employment on the value that at the time that you receive it. If you turn around and sell it, then it becomes a capital asset, and you either have a long-term capital gain or a short-term capital gain when you sell it. So let's then look at so that this type of stuff is all defined in 2014-21, that notice, and so it cleared up a lot of problems. I mean, basically it says that this isn't a currency, it's a property. And it gives some examples, and it gives questions basically that people might ask about things that I just talked about whether it's subject to foreign currency gains and losses, which the IRS says it's not. People ask if it's subject to self-employment. The IRS says yes. Is it taxable? Yes. So IRS Notice 2014-21 is a very short notice, but you can find it on the internet if you want to read it, and it's fairly easy to read as well. Then the IRS came out with another notice last year, and this is an IRS revenue ruling. It was in 2019-24. And so there had been some confusion over what happens when, if you look at Bitcoin, for example, they kind of spun off a new coin called Bitcoin Cash. And when they did that, they actually created a new blockchain, all right? And So then they have they have two blockchains, one for Bitcoin, one for Bitcoin Cash, and they're completely independent of each other. And they go on and keep their own transactions and stuff. When something like that happens, that's called a hard fork. All right. And I don't know how anybody in their right mind would know that what a hard fork is unless you read it and become familiar with that term. But that's what a hard fork is. So the IRS in 2019 addressed hard forks in that particular situation, because in that hard fork situation where Bitcoin spun off to Bitcoin Cash, if you received additional new Bitcoins of Bitcoin Cash, for example, at that particular time, you may have had a taxable event, all right? If you did not receive any new Bitcoin currency, any new cryptocurrency, you did not have a taxable event. So in Revenue Ruling 2019-24, it basically says if you did not receive any additional cryptocurrency during that hard fork, that you don't have a taxable event, okay? Now, if you did receive cryptocurrency during that hard fork, it may or may not be taxable. It depends on whether you've got control over it or not. So you see the bottom statement here. The event's taxable when the taxpayer is able to exercise dominion or control over the cryptocurrency. So when you have the right to sell it and do whatever you want with it, then it becomes taxable, okay? If you don't have that right yet, even though you may have received it through an airdrop, and that's what they call it, an airdrop, because it just kind of drops into your account, it's not taxable until you have control over it. Once you get control over it, it becomes taxable. So that's what 2019-24 tried to clear up. And so there's still a lot of questions about cryptocurrency and the reporting and stuff, and we'll talk about reporting in just a minute. But so in 2019, they actually changed the 1040 again, and you'll see down there at the bottom, it's circled in red down there. At any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? Yes or no? That was added in 2019. It's going to be there on probably every tax return in the future, because the IRS wants to know what's happening here. And I have to say, if you hit yes on that, you better be reporting some type of income or loss from cryptocurrency, from an exchange of cryptocurrency. If you hit no, well then hopefully you're telling the truth, because the IRS may be able to track this down. They are requiring the currency exchanges, the cryptocurrency exchanges, to keep information now, so that they can actually give reports on this stuff. Now, if you're in the stock market and you got a broker, you get this nice big brokerage statement at the end of the year, and it's got your interest on it, and it's got your dividends, and then it's got your tax sales and losses on it, and it's got your basis on there, and so what your gain was and stuff, and what your loss was, and it's very easy. I mean, it's not necessarily easy if you have 1,000 transactions on there, but it lays it out very nice. They have not required the cryptocurrency exchanges to do this. They have required them to keep information, but the problem is that the way these exchanges work, it's very difficult for the exchange to actually know, in a lot of cases, what your basis was, especially if you're trading through several different exchanges, and it makes it a lot more difficult. So don't expect to get a 1099-B that shows all your sales and all your purchases and your gain and loss on those things. So what you're going to have to use instead is the transaction statement that your cryptocurrency exchange comes up with. Okay. So no 1099-B. Now should mention that in the case of where you're paying a contractor, you're giving cryptocurrency to a contractor or something like that, you will issue a miscellaneous if it's over $600, and you should receive one if you receive over $600 in Bitcoin or Ethereum or whatever the case might be. All right, so in 2020, you're going to have to calculate this. That's what it's looking like. From the transaction statement that the cryptocurrency exchange has, and they usually have that online. Now let me show you one that Coinbase has. This is pretty small. So on this transaction report here, there's basically two transactions. One is a $5,000 investment in Bitcoin, and the other is a $3,000 investment in Ethereum. And so they're purchased on a particular day, and then they're sold a couple of days later. So Ethereum is sold, Bitcoin is sold. And then you'll notice that you got other cryptocurrencies out here like Maker and XLM is, I can't remember even what XLM is, but some Coinbase at least, and that's who I've been using as an exchange, comes up and they say, hey, we'll give you free cryptocurrency, and they make these deals with the currency providers, and they say, we'll give you free cryptocurrency if you'll learn about our coin. Okay, and so they have you take a couple of videos, and they're very short videos, and so you take their videos and they might give you a $2 in coin, you know. So if that happens, you're actually earning money. And so if you have over $600 worth of earning of cryptocurrencies in a year, by taking their little videos, you're going to get a 1099 miscellaneous probably, and you may have self-employment income on that. So be aware of that. But that's what this other stuff is. So you see the Bitcoin and you see the Ethereum up there on the top four lines. And then the other stuff is other coins. And in this case, this was me, and I took a couple of little classes here and earned some other coins, because you never know. Maybe they'll be the future Bitcoin of the world. I don't know, but so anyway, that is what I wanted to talk about. And you know, there's a lot of things that you need to understand when you go into cryptocurrencies. These markets are always open. They don't seem to close at all. They move very fast. So you got to keep an eye on them. So if you're going to invest in these markets, you got to understand them, and you got to understand some of the terminology, like the wallet, which is basically a wallet where you keep your money, and then the blockchain and how the blockchain works a little bit. You don't have to understand everything about it, but a few things would be good. So, but I think they're probably there's going to be a lot more of them. It is a wave of the future. So. And who knows? It may become, once we deflate or inflate our currency to the point that it's worth nothing, maybe Bitcoin will be the new national currency. Who knows? But thanks for watching. It's good to be with you, and have a good day.